Normally, we would have some good times in the markets right now. We had better than expected job numbers. But that was just a momentary distraction as Wall Street remains obsessed with Europe's debt crisis. The value of Italian bonds, the latest to be questioned. Plus, the Greek problem is not going away. Ashley Webster is live for us in Athens, where Parliament just began debating the fate of Prime Minister Papandreou. Back here at home, John Corzine has resigned as the CEO of MF Global Holdings. We're going to go behind those headlines. And it's New York Marathon weekend. I did it a few years ago. 40,000 runners doing it this Sunday. Coming up, the big business of marathon travel. Well, hello to all of you. I'm Cheryl Casoni. Joining me for the hour today, two fellow runners and triathletes with me. James Frischling, co-founder and president of NewOak Capital. Ladies, stick around. Pictures of him in action coming up. Market Watch reporter Steve Jelsey, who refused my producer's request to put pictures
just don't have it
into the show.
I still don't have power in my house. So.
Steve, yeah, I don't know. Anyway,
find him.
Guys, well, that's going to be later on in the show with both of you. But first, I want to get to, but again, there is volatility. Now, I want to take that to Jim Frischling, Jim, because we are seeing market volatility, in particular with regards to what's happening at the CME. What has been your take on what we've seen at MF Global? Is this more common in the industry, in the futures industry, than we understand or believe right now?
In terms of what just happened to MF Global, no, this is not common. And in fact, the buzz from some traders and folks in the trenches of these markets say this story is clearly ugly, what we're talking about, and I'm hearing it's going to get worse. I've even heard people, and I say this recognizing this is just, again, from the rumor mill, but words like jail are being talked about for folks involved. I didn't hear that during the Lehman crisis, with the default of bankruptcy of Lehman and other financial entities facing this kind of pressure. So maybe it's just fervor. Maybe it's because former Governor Corzine is obviously the focal point here, but the word from the street is really ugly on this story.
Liz, I have to say, and you talk to anybody that's followed the career and the life of Jordan Corzine, there's a lot of people that are very much still surprised by this as it unfolds. What about the investigation as it goes forward with regards to Corzine? We're still missing accounts, correct?
Yeah, there's a shortfall that's unaccounted for. The bankruptcy trustee is essentially telling Fox, his office is telling Fox Business that they are on the stick. They're hiring forensic auditors to basically find out what happened. We don't know if the money is actually missing. We don't know what is going on with the unaccounted funds right now. The $633 million estimated. That number could rise. It could be lower. So, you know, that's what the focus of the probe is right now. The CFTC chairman, Gary Gensler, saying this is really concerning to him, and this is his priority is finding out what happened with the funds. SEC sources also telling Fox Business that's the focus of their inquiry right now, as well as the CME. They want to know what happened to the unaccounted for funds.
Steve, I want to give you a last word on this.
Sure. Well, it's just funny because I think part of MF Global was made from a company called Refco that had some similar problems. So it's kind of like a curse. It almost seems like there's a curse around this company or something like that. But you know, Corzine was the head of Goldman Sachs. He's the head of he's the head of MF Global. He's the governor of New Jersey. This is a huge downfall for him. It's a huge story. One of the biggest stories of the year on Wall Street, I think.
All right. Well, guys, I want to thank all of you.
I think so. You know, most of the job losses that we're seeing now are happening at the state and the local level. More at the state level this month than at the local level. But I think that reflects the fact that we're still seeing, you know, ongoing issues in the state and local sectors. The state governments are actually seeing some increases in revenues as the economy has gotten better. They're, for example, seeing better sales tax revenues. People are spending a bit more, and so those numbers have turned better, and that takes some of their need to cut jobs and costs off the table, or reduces it to some modest extent. But boy, at the local level, where they really rely on property taxes, and those numbers are still coming down, you know, there's still a lot of pressure. So I think we're maybe approaching a turn, but I still think we're going to see job losses in those sectors for many months ahead.
Michelle, I found the report to be, again, very neutral. And I guess it seems like employers just don't see an urgency to be adding to staff. How much of that is coming, you think, from, let's say, the uncertainty overseas, here at home with our, you know, heading into an election year, versus just, again, no need to do anything now?
Oh, I think you're so right, because we know that companies are sitting on boatloads of cash. I mean, they have the resources to go out and hire workers if they thought that they had a need to do so, or if they wanted to produce more to take advantage of a rise in demand that they saw coming. They don't see that now. They see a lot of uncertainty, as you said, not only with Europe, but with what's going on here at home. The Joint Select Committee is supposed to have a plan by November 23rd. That's not looking, that's looking difficult, so there's going to be a lot of noise back on the U.S. fiscal front, perhaps between now and year end. I think companies feel that they're not going to get paid to stick their neck out, and there's no reason for them to be hiring, and in this uncertain environment, it's better to sort of be cautious, and I think that's why the numbers are good, but not great.
Well, running fans of all shapes and sizes are gearing up for the New York City Marathon this weekend, and despite the rocky economy, Americans are still hitting the road in big numbers, running for local clubs and joining marathons around the country. I have done several of these trips, and with so many runners continuing to lace up businesses, city economies are actually seeing big profits from this. Joining me for this week's On the Road, Mike Norman, co-founder of Chicago Endurance Sports. He is at the CME for us today. This is big business, Mike, especially the Chicago Marathon, which I've also traveled to Chicago to run, because of the business and that it brings to the local economy. In Chicago, how big was it this year?
There were 40,000 runners in the race this year, sold out many, many months in advance.
It did. Okay, well, we should show our viewers that, you know, look, if you look at the biggest marathons across the country, New York is #1, but the Bank of America Chicago Marathon is #2, and then Boston and the Marine Corps in D.C. Why is there such a big interest now in traveling to do these big races? Why has it become a popular vacation destination?
It's just something that gives people an incentive to keep training, an incentive to get themselves out the door and moving. You know, they've maybe done their local race before, and now it's time to try something new and exciting that they've always heard about.
Mike, I went for a run in Central Park this morning. It's obviously the Friday before the marathon, and the park was busted. I mean, and there's so many international folks, groups running. Just, you know, what it must do for the New York area is significant. I mean, how much of this is sponsorship driven? How many cities want these events, and how many events do you think, I guess, could the market for this handle?
Boy, there's new races cropping up almost monthly. I know that in the Chicago area alone, it's astounding. I think there's no reason for it to be slowing down anytime soon. You know, people are still registering for it, and they're just looking for that challenge, something physical and mental to really look forward to and challenge themselves.
Well, I have to say, so going back to the economic impact just for a second, for New York, we're expecting about $350 million to pour into the New York economy. I mean, do you think that this trend continues? Because I know Mr. Triathlete next to me over here, Jim Frischling, who did his first triathlon this year, is looking to do more races. You know, do you think that that continues?
I definitely think it continues. We look at, you speak of triathlons, the Ironman Triathlon Corporation, you know, they sell out their events within hours, a full 12 months before the race begins. So I don't see any reason why it's going to slow down at any time. You know, I think people are looking at this as their reason to stay healthy. And it gets them out the door. If they need that incentive to do a race, they're going to do it. So the races are what gets them to stay healthy and stay running.
So, all right, so we're going on the road by hitting the road, right? Mike Norman, co-founder of Chicago Endurance Sports, coming for us from the CME today. Thank you very much, Mike.
Thank you. It's great to be here.
Steve Jelsey, I have an issue with you.
What happened?
Where are your pictures from the triathlon? My first triathlon. My first triathlon. I go out there. Who do I run into? Steve Jelsey.
There I was.
He looks great too.
Thank you. I was, you know, I was too tired to get the pictures. I guess, you know, after that. I don't know. I never got the pictures. I just never did.
I got made the right move.
Plus, I had my house was dark this week because of the blackout. I couldn't find any photos.
Yeah, but James, I mean, holy cow, James Frischling. Did you train for like a year to get ready for the triathlon? My God.
Oh no, I'm thinking that's like a 15 15 pounds of potatoes in a 10-pound sack. I don't know. Not so sure. I'm loving the photo.
But I have to say that it was fun to do this thing with you guys because to both, I mean, look at all of us. I mean, none of us are, you know, like uber athletes or anything, but all of us really got into the triathlon thing and the running thing. So I think that says something.
No, and I think it was great. And actually, the segment, it's really true. I mean, how much gear gets purchased, how many people come to the city for these events, the spending that's going on. It really is extraordinary.
We'll be right back, everybody. Well, emerging market funds seeing their biggest week since April with $3.5 billion flowing into those funds in the past week. This as the iShares Emerging Markets Index rose 2% just today, paring the week's loss to 1.7%. Jim, you like emerging markets. You really like Brazil.
I do, actually. I think for a number of reasons, notwithstanding even the Olympics going that way. But the truth is, I'm liking that it's away from Europe. It's actually away from some of the trouble we're having. And I do believe that the inflows are consistent with, I think, a lot of issues are going on with it. Their banking community, their financials are, in my opinion, handling this better, operating better. And I find it interesting. You know, the VIX is something I've been looking at in terms of just how extreme it is in terms of the level of the VIX index. It's a market indicator of the volatility. We haven't been at this level, I think, 3 times over the last 20 years. 1998 in the Asia crisis, 02 the stock bubble, and 08 at the start of the financial crisis. So I am concerned of how volatile the markets are, the correlation among stocks, and not to be difficult with your guest from GAMCO is no longer here, but we are liking bigger as opposed to smaller caps in terms of ultimately, if things do get more troubled, we think the companies with big moats, big distribution channels, big consumer presence are going to fare better than some of the small caps.
And Steve, I mean, you were kind of bringing that point up to her as well earlier.
Well, the small, you know, you have to look at the small cap companies for the hiring because the big companies aren't hiring right now. But you know, it's the big companies have the bigger pocketbook, so that helps. You know, in times of difficulty. It's interesting to hear you say good things about Brazil because people were so worried about the administration that they have. They're being too leftist, but I guess they're relatively business friendly. There's a lot of energy development going on there.
And I think it's very relative.
Yeah, sure.
Again, when there's, you know, their house is in better shape than others. But again, the correlation among stocks right now is so high, and the fear factor coming. I think people 08 is still very fresh in people's minds. I don't think stocks are necessarily overvalued, but certainly there is a lot of headwinds and a lot of issues. We've been talking about Greece. You talked about Italy, which is obviously the next area to be focusing on, and all that I think presents at least some significant headwinds that not a bad time to be taking some profits. Certainly.
Would you be, so I guess I think I know how you're going to answer this question, but would you be a contrarian and take a little risk on some European banks? I mean, they're so beat up right now. The other side of me says maybe there's a deal. No,
I think it's really interesting. To me, it really comes down to, you know, when you lend someone a little bit of money, you control them. When you lend someone a lot of money, they control you. Greece is damned if they do and damned if they don't. Now the question is, which is the lesser of the two evils? Everyone else wants Greece to basically accept the terms and we can move forward. If that happens, I think you're right. There's some interesting plays in other European bank stocks. However, they're really threatening, you know, to do the draconian move. I think it works out. So I like your bet. I'd even say, yes, other European banks, not bad right now.
You never know. Jim Frischling, thank you very much. Team Chelsea. Guys, thanks for spending the hour with me.
Thank you very much.
I'll see you out there on the races next year. Coming up.